Before we even get into any of this morning, I want to take my vitamin, but I want you guys to listen to this about the 50-year mortgage because I've been getting a little bit of backlash. I got an email from somebody in particular that I found pretty interesting, and I'm going to play a clip that is the easiest way to explain why the 50-year. I can't even believe I have to explain myself with this, but I'm not surprised here. So while I take my vitamin real quick, this is my I mean, technically, it's technically like a pre-workout stick because it's got 100 milligrams of caffeine, but it's got all of your major minerals in it too. So, anyhow, it's the 50-year mortgage. If you don't understand it, while everybody gets in here, I'll be able to see who's in here this morning. We'll set this up and watch this real quick while I take this.
Total interest paid over those 30 years at Mar-a-Lago. So the stated goal here is to make housing more affordable, in quotes. That's not what this does. The 50-year mortgage does not make homes cheaper. In fact, it makes the housing crisis into a dumpster fire. And let's walk through the reasons why this is. Number one, the math doesn't work here. Let's look at the numbers that have been thrown out there. We're going to take a $450,000 home as the example. A 30-year mortgage at 6.25%, about $2,700 a month. Total interest paid over those 30 years, $547,000. Not great, remember, on a $450,000 home. But now let's look at a 50-year mortgage, and to keep it apples to apples, I'll even give you the same exact interest rate at 6.25, which is not going to happen because this is a much riskier loan, so banks are going to charge more for it. But let's just say it's the same interest rate. Well, your payment now becomes $2,450 a month. So you're saving $300 at best with this loan. Total interest, this is the kicker, over $1 million in interest alone on a $450,000 house. Do you understand how insane that is? Now, in reality, lenders would charge that higher rate on a 50-year because it's riskier, at least 1% more, which means the savings aren't even going to be there in your monthly payment, and the interest is going to be even more than that million. So that 7.25%, let's keep it there.
So I just want you guys to hear this, how much you're actually going to pay. And then I'm going to explain why this is not good for risk assets even. Like, I'll get into it, but just listen to this while my vitamin digests.
That's $2,600 versus $2,700. So whoop-de-doo, you saved $100 a month, all to pay $1.18 million in interest for that home. That is insane. That is not affordability. It's a financial illusion that's going to keep people broke until they die. Because we know the average first-time home buyer is now 40 years old. So let's walk this out. You're going to die statistically before you pay off your mortgage. So I guess generational wealth is going to turn into generational debt. That's what you're doing if you take this on. Reason number two, you are not building equity.
You are slave to the lender, people.
So here's what really happens under the hood. You see, mortgages are front-loaded with interest. So when you look at your amortization schedule, that's the nerdy sheet that shows you how much.
And this is what a lot of people don't understand that are homeowners. And this is the part I'm going to play this minute or two, and then I'm done, and we're going to get into the charts. But listen to this, please.
Which is going into principal versus interest. At first, every single dollar, almost every dollar is going to the bank, not toward your house. So let's share some examples here. On a 15-year mortgage, you start paying more principal than interest around year 8. That's when you sort of tip the scales. On a 30-year, takes about 12 years. On a 50-year mortgage, it takes almost 40 years before you're paying more of your payment to the principal than to interest, which means the average homeowner keeps their home for about 11 years and they're moving on. By 11 years in, you've paid that $450,000 mortgage down to about $380,000. Do you not see how insane that is? You have built almost no equity in almost a decade by taking on this kind of loan. So that's problem number two. Problem number three, it makes the housing crisis worse, not better.
Yes.
You see, stretching debt doesn't make homes more affordable. It's just going to make home prices go up. And we see this with the car market, right? We're introducing 7-year car loans. Well, what happens? Everyone just goes, cool, we'll just keep raising the prices. College tuition, we saw something very similar happen because they realized people would just take on a bunch of debt and the government was going to back it. That's what's going to happen with these mortgages. So when buyers can afford a slightly higher payment, builders and sellers are going to respond by raising prices because now we have more demand. It's a classic supply and demand curve here. So that's problem number three. Problem number four, it's going to add massive risk for homeowners. Here's why. Borrowers would pay roughly 400 to 500 grand more in interest on that medium-priced home if it's stretched out from 30 to 50 years. And when it takes 3 to 4 decades just to pay down half of your principal, even a small decline in housing values could wipe out all of your equity.
It's insane. This is
That's not including
insane.
just closing costs and realtor fees that would eat into what you would have built up in equity. That's frightening. So this is a debt treadmill where you never catch up. If you move to the next home a decade later, you're just going to make a lateral move. You've built almost no equity. Number 5, it is a legal and financial nightmare. To make this work, regulators would have to rewrite rules and convince investors to buy these ultra long loans. And I don't know if you know how banks and investors work. They want money like sooner rather than later. So what they're going to do to compensate is higher rates, more baked in fees, because it's already a fragile system as it is. So this is a financial time bomb. Which brings us to problem number 6.
The last one I want you to
This doesn't
hear.
benefit the American people at all. It only benefits banks, builders, and Wall Street. Here's why. Let's be clear about who wins here. Banks get 20 extra years of guaranteed interest, which means if they actually play this out, they're going to get double what they would have in that 30-year mortgage. Then you've got builders. Builders get to sell higher priced homes because monthly payments look more affordable. And then you've got investors who get 50 years of cash flow from your paycheck on Wall Street. So the only loser in this setup is you, the homeowner.
And that's the truth. Think about it. Everybody complains about the rich person. What do you think happens here? This is the worst thing I have heard in a long time for the housing market. Now, if you own a house and your house is paid off, this is a good thing if you own a home and it's paid off, only because the housing value is going to continue to go up. But now if you want to buy a new house, you're not going nowhere. We're stuck. I'm not moving. I already told you guys, like, my house paid off. Where I live, I could buy a house that's bigger. I'm in a slightly better position than I was when I bought this house. Well, that's an understatement. A lot better position than I was. But I'm not going anywhere because I understand to the core that you are slave to the lender. You are slave to, now they want you to do 50 years. So the reason why I correlate this into risk assets, which we're in a risk on basis. If everybody stretched so thin that they don't have the bottom line to barely afford their housing, and they're getting stretched thin on their, because everybody wants a fancy car. They want the newest car and the biggest house and the nicest stuff. You know, no matter if they can afford it or not. Well, where's the rest of the money coming for risk? No, Scott, you're not late. I actually played a 4.5-minute clip that I wanted people to see about this 50-year mortgage while everybody was getting in. Something I might do more often. Play something informative as everybody's getting in before we get into the chart so everybody can kind of sit in and think about. That's something I want you to think about today. Not just if you need a 50-year mortgage, but how that's going to affect the greater landscape. How does that affect if you have to, let's say you want to add an addition to your house. What does this do to cost for your housing? What does it do for supplies? Like, what if I wanted to add a second story to my house? Maybe one day I will. That's going to cost 100 grand probably, right? Maybe I want to build up because my house is only 1,200 square feet on a good day. Now, the unique thing about my house is it has 4 bedrooms. Around me, they're usually 2 bedrooms. If you're lucky, you get 3 bedrooms. Nobody has 4 bedrooms. That's the one caveat about my house where I live. So that's the question. So now we start to look at risk assets. Well, why is the price being so negatively affected? Well, one, there's not a lot of money going around right now. You think it's by accident that Trump's going to give everybody $2,000 that makes under $100,000? Because where does the broke man, what's he going to do with the $2,000? Is he going to pay off his debt? No. Think about it. Somebody who doesn't have any money is not taking that to the hell with that. They're going to say, I deserve this. I'm not paying off bills with this money. Hell, I didn't even earn this money, so I'm going to use it on my gambling. So most people are going to risk in crypto. Some people might buy gold and silver, but I doubt it. Unless you're in a position of power. But I think what this money is going to be used for, just like in the pandemic era. Remember all that free money that people were getting? Remember what they did? They got nicer cars they couldn't afford. They got fancy stuff they put on payments. And guess what happened when the shit hit the fan? They can't afford it now that's being repossessed and their credit cards are out there. That's what's going to happen here. You're going to get people that buy, oh, here's a fancy down payment for a nice little car or something stupid. That's what's going to happen. Oh yeah, somebody said Amazon. Nick said Amazon getting rich again. You better believe it. So that's why, to put it mildly, everybody, and Nick, thanks for being a very trusted mod in here and in the Telegram and our technical advisor in the Telegram. I can't even express to you how grateful I am knowing that you work a full-time job like most of our audience does while we do this. But the reason I talk about this stuff is we have a very, very, very unique opportunity in this community, not just understanding risk, but understanding commodities and understanding real money versus the unit of debt and understanding how to expand our wealth through the emerging markets and understanding, and I know mutual funds aren't sexy and exciting, but when you get into the right sector of them, you can expect a return of 10 to 12% a year. If you can do that 7 years at a time, every 7 years, you're going to double. You know, so it's like if we can find ways around all of this in the right sectors, I mean, we're getting into a time where it's a money crunch. We're being crunched. Not this winter in Michigan, supposedly, my energy is going to be 40% higher for my gas for the winter. 40%. The 40%. Imagine if you're already paycheck to 40%. I don't know what person who's paycheck to paycheck can just say, okay, it's costing me $200 a month for heating. And in Michigan, it's bad. So we're in the negatives, especially when it doesn't hit zero all day. You're talking $300 or more a month. 40% of that. Think about that. That's another $150 a month. You're talking now $450 to $500 a month instead of $300. I mean, that's a lot of money. That's a lot of money. So we've got to figure out a way to stay ahead in this game. And I'm not even just talking about the heating expenses. My sewage keeps going up with the water and the millages and all this crap continues to go. There's just it's so we've got to figure out a way. So before the whole audience leaves, because who wants to hear real information, right? Let's get into the crypto. Let's get into XRP. Let's get into what I was talking about in the title, and let's get into the rest. Good morning, 10:21 a.m. Eastern Standard Time on this Saturday, November 15th, 2025. I'm XRP Future Millionaire, and I reside in the great state of Michigan, or should I say socialist home of the New Republic. As we can see on this end of the year of 2025, XRP sits at $2.25. Not too shabby. Now, the one big thing I see this morning, Bitcoin's up at 96,199, decided to go up a little bit here. Hopefully it's not trying to take aim at that 100,000 mark to hit the back test resistance at the broadening wedge. I mean, the rising wedge. We don't want that to happen. Obviously, in the daily time frame, you can see how it's a perfect rejection on that rising wedge. I mean, if you want to look at it from that perspective, you can't cement it any deeper. But before I go any deeper into this conversation, I want to thank, I believe it was Mr. Euler, who gifted a sub. I mean, My Yard Now. I seen it was not Mr. Euler. But My Yard Now, thank you for gifting a membership of Tom's Army on this beautifully blessed Saturday morning. Don't forget to give thanks to your Lord and Savior, Yahweh, Yeshua. God is present amongst our actions here. I know because several people have mentioned our Lord and Savior on this beautiful Saturday. So we're being guided. But My Yard Now, thank you so much for that gifted sub. Being in Tom's number 3+ months with the XRP Meteor. And Nanastad Boy gets a gifted sub in the first month with the emoji badge of me being abducted by aliens. So I really, really appreciate that pay it forward gesture, my friend. Silver Days, good morning. Cool Cat, welcome in. Michael Garbanzo, thank you both for being in town our 3+ months with the XRP Meteor. Aaron, good morning. Juice, welcome in, and thanks for being in Tom's Army for your first month with the emoji badge of me being abducted by aliens. John Bugathorpe, good morning, and thanks for being in Tom's Army for over 1 year with the I Told You So Bad. Says happy Saturday to the talented Tom and crew. Appreciate that. Shout out to the crew as well. I love it. Umrish, welcome in. Says, as Ricky from Trailer Park Boys would say, hate to say, but you know, it's funny, like, about Trailer Park Boys, Julie, it always tells me I'm the cross between Ricky and Julian. Very much can act like Ricky, but have more of the enforcer role, kind of, if you want to put it that way. Because I have to, well, you'd have to know me. Silver Days, welcome in. Mo, good evening, or good morning, and thanks for being in Tom's Army for 2+ years with the XP589 Moon Badge. Arelli, good morning, love. I'm so glad to see you in here as always, along with Mrs. Stott. Look, how awesome is this? Mrs. Stott, welcome in. Thank you so much for being in Tom's Army 3+ months with the XP Meteor, along with Shane. Hope Mr. Stott is doing good as well. Tanya, love, I'm glad to see you in here as well. We can talk about HBAR today, Tanya, because if we continue down this trajectory, you know, we're getting closer and closer to my area where I am willing to add another 10,000 HBAR. Proudly add them if we get down there. But we'll talk about that, Tanya, I promise, just for you. And thank you for being in Tom's Army for, wow, over 3 years. Well over 3 years now with the XRP Diamond Hands badge. Where does the time go? I'm going to be 42 in just over a month. When I started this beautiful station, I had just turned 38 a few months earlier. Interesting. 1970 Legend, good morning, my friend, and thanks for being in Tom's Army for over 1 year at the I Told You So Badge, and a very trusted mod in here, our resident Buckeye, who continues to defend that national title properly. And undefeated, #1. Few weeks away from the showdown in Ann Arbor. A showdown that I am once again not looking forward to because I believe that we could get our asses wiped this year. But, you know, I thought that last year and we won. So until you break that psychological edge, I guess we still have a chance. But yeah, the back-to-back opportunity for the Buckeyes. Now, if Michigan beats, well, let's worry about it. Let's worry about those Wildcats today. But I welcome you in here, 1970 Legend. Appreciate it, my friend. Down in the old Buckeye land. The old Buckeyes. Probably the best team decade to decade in college football history, if I'm being honest. Nick Morales, yes. See, you. I was reading your comments while I was showing the 50-year mortgage stuff. Yes, it's so insane. So insane. It is wild, Aaron. Welcome in. Matthew, welcome in as well. Matthew says, good morning, everyone. Ready to go broke today. Yes. Unfortunately, that seems to be the motto. But as I'm reading and saying hello to everybody, don't find this as a time to leave. Take this opportunity to hit that like button, as 64% of you have hit that like button, approximately, as 71 out of 109. Who knows if that's accurate, but I know it's somewhere under there. Pay attention to the fact that if we continue to reverse here, it's going to be at our detriment. Nobody wants to see this come and hit this resistance over the weekend. I'd rather this take the opportunity this weekend and go down and tap that 92.4. I mean, look how close we came. We came down to that 93. We're $1,500 away, for peep's sake. Another 1.5K drop on that wick. Would anybody have even flinched? No. I wouldn't have flinched. If it would have come down here, I'd be in a trade right now. I'm going to be honest with you. I'd be in a bigger trade. I mean, I'm in trades. I'm saying I would have been in a swinger. I want a swinger, damn it. And I'm talking about in the crypto market. I'm not made for that nightlife. I'm too big of a pussy. Jacoby, welcome in, and thanks for being in town over 6+ months with the XP Predictor, along with the Cannabis Podcast and Turdy Train. Appreciate that. Scotty Trades, welcome in this morning. Thanks for being in Tom's Arm for your second month with the Dusty Dollars Crypto News and being a very trusted mod in here and in the Telegram. Has his own little section in there. He's MQ. You gotta go see the leverage trading section with MQ. It's phenomenal. He might bust your balls though, because if you're trading out of whack, he's gonna tell you, and I love it. Seen him yesterday telling somebody like, or 2 days ago when they unfortunately were liquidated with 20 plus X, and he's just like, no offense, but what are you doing? Basically, he said, you have no right to trade that high of leverage at these times. It's true. It's true. When we're in that downward spiral, how you, never mind. I'm not going to get into it. I'll let him do his job. Another person who works a very full-time job and still dedicates a lot of his time as well. I love it. Catholic Faith Channel, amen. You don't own your house anyway if you have a mortgage. True. True, but the difference is if you're not upside down and you have at least a 50% equity rate, you can do some damage. The problem with the 50-year mortgages, you're never going to have a 50% equity rate. It's going to take you 43 years to flip it. Like, think about that. Your interest loaded for like 4 decades. That means when you make your payment, you're never going to see a decrease in it for like 40 freaking. Imagine buying a house and you're paying on it for 40 years and it costs you more to pay the house off then 4 decades later than it did in the beginning. That is insane. And mind you, his was at 6 point something percent. They're not going to give you the same at 30%. If it's 6% at 30 years, I guarantee you it's going to be at least 8, 9, 10% for 50 years. That's the caveat. So you're not even going to save $300. You're going to save like $50, but you're going to pay. Oh. It's not even about what you save. It's because people think about it. People want bigger and bigger and more fancy things that they can't afford. So now if you stretch it over 50 years, now they're going to say, hey, over 50 years, maybe you can afford. Oh, we're going in a bad way. Gold and silver's just revving it up. Telling you. That's where it was made. My question is, are we smart enough as a community to stay ahead? That's my question. I've been floating it for years. Are we smart enough as we are ahead in crypto and we've been able to stay ahead? Are we going to be able to stay ahead how we stayed ahead in mining stocks? Now, are we going to be able to stay ahead with black oil? I'm telling you, are we going to be able to stay ahead in that sector? Because that's what strikes next. But we have to wait for it always happens the same way. If you see a 10 or 20% all of a sudden crash in the price of oil from where it's at now, or 30%, that's your signal that it's happening again. And it's so stupid to say this, but that's the next signal. If you see oil drop 20 to 30% per barrel in a quick, sudden, swift motion, like what the hell is going on? And then they're going to start saying, oh, here we go. This is our signal to start investing in U.S. oil. That's what they're doing next. And if that happens, it's going by the book. And this would suck because by the book means we have to have some kind of intervention. I don't know if it's fake alien invasion, shutdown, but there's always something in the playbook where you have to distort the people. So that would be after that. So it just follow it's always the same shit. Just in a different way. See, history doesn't repeat, but it rhymes. So we're rhyming again. It's happening again. This time they're using crypto. So obvious. That's why they're using Bitcoin. Hey, everybody, invest in Bitcoin. You know Michael Saylor, the honest to God truth is? He's such a genius, right? He's up 27 freaking percent. If he'd have just took, and he can't sell. That's what everybody says. We better hope he doesn't sell. Michael Saylor better hope Michael Saylor doesn't sell. Otherwise, the price of Bitcoin comes crashing down. The truth is, if he had just put all that money into gold or silver, the guy would be freaking rich. He'd have made 3-4 times what he put in. At least 2 times. Right now, he's up 27 freaking percent. 27%. Do you know what that? 27%. That means if Bitcoin comes down 27%, this guy's even. Hey, Mr. Saylor. You know, us at the lending program over here, we've lent you out all this money. Somehow we have this guy who knows technicals, and he just said we broke out of this rising wedge to the downside, and we might be eyeing 59,500. Your average price is around 74K. I'm sorry, but we're calling part of this loan. And he's going, oh shit. Not just Michael Saylor, but everybody else. So like, that's why Michael Saylor is going to announce on Monday, likely, that he bought more Bitcoin. Michael Saylor is part of the U.S. government. He is what I call controlled opposition. Buy all this Bitcoin, everybody. Forget about gold, the easiest store of value. So instead of putting your money in gold at 1,600, 1,700, 2,000, 2,500, buy Bitcoin. No. 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 This is a tragedy what's happening right now. It's setting up for the epic rug pull of all rug pulls, not just in crypto. I'm talking all across the board. In a safe place, again, it's exactly what you're going to end up seeing. You might see volatility, ultra volatility, but think about it. Look at the volatile numbers we're seeing across gold and silver and mining stocks right now compared to the beginning of the year. We're talking about volatility at $4,000 plus for gold. Oh my God. People are talking about silver crashing. It's over $50. We were buying it in the community at 14, 16, 19, 21, 24, up to 26, I believe, in silver stacking when we stopped. We were buying gold in the community from 1,600 to just under 2,000. I didn't want to buy it over 2 because that's when we focused on mining stocks because the price separation was too much. So then in January of this year, I mean, I start looking at this and it's like, it's so funny how this happens because the optics are you can't make any. And now you look at all this, even B2 gold dropping back to 410. We were buying it at 240 beginning of the year. Barrett Gold was at 15. Fortuna was at 250. Pan America was at like 16. First Majestic was at 3 something. Hecla was at under 4. Silver Corp was under 4. Dolly Varden was at like 2 something or 1 something at the bottom. And now you see the pricing and it's like, what is this? Why? Why are we being told something? And the whole illusion was buy crypto this whole year and you're going to be fine. The truth was it was so much easier than that. And we talked about it in January and we've been talking about it. Now is the time when you start to focus on a transformational flip. When everybody was talking about it in January, like this is the easiest trade for crypto, I'm like, we got to get out of this shit. Go liquid for now. Now when everybody's like, we got to get out of this shit, it's like, we got to start looking at this junk. The weekly's massively oversold. We're waiting for the monthly to catch up, which is happening in real time. But now everybody's running away and I'm like, oh my God, guys, look. Open your freaking eyes. This is the next easy trade. This will be the easiest trade of the century because, hello, what did I call to get taken out? 12, right? I called to take out 12 in the fear and greed and then tap 10. That's what I've been calling for. We finally took out 12 and hit the year low at 10. This is good. And after today, it's probably going to take out a new yearly level. We're going to break down again on this. I can't imagine it's going to be higher than it was yesterday. But we took out that 10 finally that I've been talking about for freaking ever. The market tends to rhyme and takes out these right there. We took out February 27th now, finally. So this is what we've been talking about. We were expecting this. I've been talking about, if you were part of this community, taking out the yearly fear and greed index, the low at 10. So I think it's going to take it out today, probably. Finally. I was calling for finally getting under 12 2 weeks ago when it was at 30, and then it went up to 50, and I'm like, well, this sucks. Why is it going up? We don't want this. That was a couple weeks ago when it finally made that return, or up to 40 or whatever. That quick move back up in the beginning of November. I know it went up to close to 50 again somewhere, right there, October 29th. But then November, after it dropped down, it went right back up. Then we had one final push when it had that, for whatever reason, we had the overzealous push up in the beginning of November. And it's like, how can we be back at 42 with what we're doing? It doesn't even make sense. Anyhow, I'm very happy with where we're at now. For anybody who tells you we're closer to the bottom than the top, right, or closer to the top than the bottom, they haven't studied crypto. But I've had these targets for a year. I mean, it's almost been a year. And we're finally filling them out. Like, I feel so much happier now than I was even 2 weeks ago, guys. Now the daily's still clearing out. The daily's giving us a lot of reality here, like a reality check. Like, don't, it's kind of that thing. You know, don't count the chickens before the eggs hatch kind of thing. Like, we're counting our chickens and we haven't even banged yet kind of thing. The chickens haven't, there hasn't even been that passionate moment. The seed hasn't moved. So we don't even have the opportunity of the chickens hatching because they haven't even the first step hasn't even they haven't even met yet. That's where we're at right now in crypto. We haven't even met. Harry didn't meet Sally, so to say, not yet. So we can't have the rally. So that's where we're at right now. We're in the middle. We're in no man's land. I don't care what anybody says. It's not over though. 4 hourly's massively oversold. Weekly's massively oversold. Monthly. Look how we're moving down. We are catching up, and I feel, and I know Nick feels it, and Scotty Trades feels it. MQ in the Telegram. If we just stay emotionless and you just watch this and see how it's evolving, it has no choice. Now, in the worst case scenario, we go down 9/10, and I'm okay with that even because we'll see the opportunity and we'll, oh shit, all ends met. But I don't see that happening. You know why? 50 basis point rate cut. 50 basis point rate cut is what they're not telling you right now in December. They're acting like the illusion of we're going to have a rate hike. We're not having a rate hike. I would almost bet my last dollar, almost, because the government likes to pull optics sometimes. There is no way, there is no way that they're raising rates. It's impossible. It's impossible. Because they're going to quantitative easing. So it's the same thing I've told you before in this audience. That would be like you taking out a house loan for 10% and then raising it on yourself to 10.5% before you make your first payment. It's not going to happen. Hey, I got a 4% interest rate. Oh, by the way, in your fine print, you agreed to the fact that before you make your first payment, it goes from 4.15 to 4.65. No idiot would make that deal. So you're going to tell me the government's going to raise rates the first time they go to easing? Like, quantitative tightening officially ends December 1st. That's not a debate. That's already been said. Which means we should be going down until December 1st now. You want this to be a sell the rumor, buy the news event. So everybody's selling the rumor. And then once you get the news of the rate cut, it fucking goes insane. That's what it's setting up for. So we need to have, exactly, Scotty, we need that hard bottom. We had a soft bottom that we've talked about. That doesn't do us any good. Because now you leave the open end. You can't have it. I'm just happy that we understand this the way we do. I'll be honest. Because I used to feel like I was on an island in 21 and 2 when I would do this in 23, so to say. Then we started to get a little bit more confluency. But in 25, the greatest gift that I've been given by our Lord in 25, as far as my channel, is the gift of evolution with having Nick on my side in the Telegram and being able to talk to people in the Telegram and here, and adding Scotty, who's MQT in the Telegram, having you on my side and being able to explain this deeper than I ever could to a bigger group than I ever could. Like, that's the biggest blessing I've been given. I asked for help. I've talked about it live, like being able to expand this community into something that's deeper than just me. Because I think sometimes it might be easy to understand your fellow peer, even though I am. It doesn't seem like it because it's my channel. And I suppose at 47,000 plus people, it's a little bit different than when I had like 3,000 or 5,000. So people are like, oh, he's got all these people. I don't know. It's still, so I feel like the more of our peers that can do it and the more different ways we can explain it, it's just a majestic thing that happens. I think it is. I really do. I think these end up being majestic. Like, this is what we really want to see. We would have wanted to see, but we're not. It's just not ready. This looks like ass, this pattern. This looks so bad. Like, I wouldn't tell my worst enemy to buy this setup. Like, everybody who was buying at 230 and 234 going long, Scotty and I both said in the Telegram, I just don't understand why you guys are going long here. It doesn't make any fucking sense to take out a leverage trade at 230 or 234 to go long with this. It makes no sense. Now they're sitting there sweating their nuts off down to 225. I mean, you're talking about people that are in our community that we're trying to put out all this evidence of why you've got to kind of step back here. Hey, if there was easy money to be made, I've shown you time and time again, I'll take it. But when it's speculative, I'm not taking it because then you get caught up in all this. I don't want all of this. What I want is easy money. Hey, we've back tested. Looks like we've got the setup made out. Hit the back test after where it confirms it, and then that's where you ride it. Here, you got nothing. You got all you're showing here is a bearish drop to $1.99 in front of me. That seems like it's set up. I put 219 in my title. I put because you can't skip areas. We're only at 225. But in my title, I put, you know, if it'll show me, XRPI's 219, even, oh, I did put even sub $2, sits in no man's land as Bitcoin FVG remaining unfilled at 92.48K. That, and it's somewhere around that area. I'm sure Nick or Scotty could tell me the exact level. It's not 92.48. It's somewhere around there. I can't remember the exact number. 92,004 something. But yeah, XDC is definitely doing something right now, but it's already come down there. XDC came down here, but it's going to find itself in a whole nother shitstorm because it hasn't cleared out properly. So if I would have loved to have seen XDC come down and done the step. And what I mean by that is the step. Boom, boom, triple bottom. Like you have lower low, lower low, lower low. Then you can have the higher high, higher high. And then if you swing out and break back up, now you've defined something. And look what that ends up being at the back end. So you come down to a tap, tap, tap. But then when you bring this out, you got a big W that could have formed here and went out. That's what I was hoping for. Remember I talked about on Winning Wednesdays. I was hoping for the fact that we could have a cheaper buy next week and that it would take the down route instead of having to pay the higher prices. Because the first week together, when we were doing the Winning Wednesdays, the reiteration of it, we paid 5.1 cents. The second week, it was like 5.6 cents. I would like the third week to be at 4.7 cents. But we took the upward route right now. Now, is this anything more than a rejection? I don't know. You know, it should. I don't want it to. I think this is just building the next leg down, probably. Proper rejection would be to come at the drop point right about here at 5. Oh, man. Yeah, it almost looks like that's what it's doing. I don't think it's a great indicator of what's to come across the market. I just think it finishes moves later than the rest of the market, which means tomorrow will probably be the drop in now in XDC. 1970 Legend said, spot only for this guy. I'll make the finish line. Absolutely. Absolutely. Spot is king. 100%. 100%. You know, it's that's the honest to God truth. I just speak of the other side because so many people get demolished by it that I finally felt like I needed to speak up a little bit and be like, don't be stupid. I used to say it before, but now at least showing why you don't want to be stupid at certain times. Incredible Volk, thanks for being in town during 6+ months with the XP Predictor. Dead cat bounce on XDC. It looks like it. It really looks like it for XDC. Like this looks like a tailor-made dead cat bounce. The problem is it's doing it in an unsustainable way. I mean, we're so overbought now in these 2 and 3 hourly. We're over towards the resistance on the 20-day. It looks like we're building that resistance point to where it can come down to where we were talking about. I do believe that's what it wanted to do. I think it's hunting that 4-7 area, but who knows? I'm doing the sunny days on the exit. I wanted to do something different at the beginning. At the beginning, I wanted to put some information out that everybody could live with, that it'll help. And that was on the 50. I'm going to try to do that more often. Or maybe the first 2 or 3 minutes while everybody's getting in here, I'm going to show some informative clips that actually has to do. Maybe it'll be on gold. Maybe it'll be on housing. Maybe it'll be on something else. Who knows? No, don't be sorry, Juice. And thanks for being in town zone for your first month with the emoji badge and me being abducted by aliens. Good question, though. But I'm going to play my song as the outro when I leave from now on. Somebody made that for me. Mrs. Stott, welcome in. I think I already said hi to you, but she says lag. There's a fair value gap at 92K-ish that was never filled. Hopefully someone can explain it better because I'm learning as well. Okay. Let's go into it a little bit deeper. Sometimes I forget to re-explain it. So the fair value gap, nothing better than seeing a definition, right? So a fair value gap on a chart identifies an area where the fair price of an asset has recently changed. This change implies that when the price returns where the FVG had just formed, it will either rise if it is a bullish FVG or fall if it is a bearish FVG. Well, you're not going to know that until you can either successfully hold that area or you fall below and get rejected at that area. Like that's what I would say. But it's different. Like the Chicago Mercantile Exchange, the CME gap, that's left when the futures market closes, not to be confused by the leverage market, which is the perpetual futures market on an exchange. It's two separate things. So a fair value gap or price gap is a pattern on a candlestick chart that shows a strong move up or down. It usually happens when big investors buy or sell quickly, leaving a gap with almost no trading. This means the price moved too fast without giving buyers and sellers a fair chance to trade. So, how to recognize. So, I mean, these are good ways to look at it, but then you have the fair value gap versus imbalance, and now that's going to just be a whole different thing. So, I don't really want to look at it that way. Scotty's going to be like, you're going to drive these people crazy if you show them it like that, which I agree. And Nick, same thing. Let's see. And you can put the indicator on, but it's a price concept that identifies the areas where the balance is broken on a chart. These imbalances frequently pull the price, thus recheck, providing the trade performance, which can be used as a reliable one. So, like, that's where it ended up happening. We had I don't want to call it an imbalance, but it basically is. But that's where we had that gap area was on Bitcoin. So now it's got to fill that up. Like we've got to have some trading there. And we've known it's been there. It's just like with XRP. I talked about the FVG that was at $1.50 for the entire year. Even when it technically came to the top of the zone at $1.61, I said it's not good enough. It's eventually going to come back down there. It just needed to come trade in that section. Sometimes you just need that range to trade. That's how I feel Bitcoin, because the reason we need that range to be traded is because we need to know if it's going to hold. It's either it holds and we form some kind of majestic, and I've been trying to illustrate this for a while. It's either it forms, and instead of having a rising wedge that we've just broke out of, to the downside, mind you, we would have something like this. And I know it's something that we have to at least give the illusion is, but that's where the FVG's at. And if we can hold that, well, just maybe instead of it being that short, broken down rising wedge, maybe it still is a rising wedge, or maybe it's a rising triangle, but that rising wedge can take us out a little bit longer. And then we know we can potentially top out near 140, maybe 142, because you can ride up this. But if this breaks, we're coming to if we break 92, I mean, the technical target on that first area was 59,000 in real time, roughly 60. It's to back test this. This was the cup and handle. We never back tested it, which is ironic that we could come all the way back down. Michael Saylor, this is the problem. If it comes all the way down there, Michael Saylor would be so far underwater with how much he has. Just let's give him credit at 74K, which I think it might be higher now. We'll just say he's that low still. I mean, you're talking about he'd be 1/5 of his portfolio underwater. That would be insane. Oh, it would be insane. If I was Michael Saylor, I'd be looking at this chart going, oh my God, I should have bought gold. My God, if I could sell all my gold right now and the price wouldn't move. He tries to sell a little bit of this Bitcoin, it's going to tank the price of crypto. That's the problem. He knows it. I know it. You know it. Oh, my stuff. Where am I trading? I've said it before and I'll say it again. As long as my account's under 250K, you have the FDIC backing on certain tier 1 exchanges. I trust it in, and I don't really trust anything, but I have mine in, some of it's in Kraken, tiny bit in crypto.com, but that's only the CRO token with because I like the crypto Visa debit card. But I don't necessarily trust wallets. I've had issues on all kinds of wallets where my stuff disappeared, and then fortunately I got my stuff back on the DGB and whatnot. But the only wallet I use, and I've been the XRP healthcare wallet. I use my XRP on there with my XP healthcare. That's the only wallet I actively use. The rest of my stuff I is between Kraken. I have a little bit on TOOBIT. I have a little bit on WEEX, and I have a little bit of more of it on BITUNIX. I don't trust any of it. So, Michael Saylor is the CIA. Wink, wink, nudge, nudge. He's part of the controlled opposition. No idiot would do what he's doing. That much money. Not even he's stupid enough to do that. And a risk asset, no idiot would do this. It's just so that more countries end up going deeper and more. Look at all the businesses now that are following. And most of them, guys, I hate to break it to you, a lot of them did it over 100K. Oh, we're going to sell common stock to do this. It's absolute trash. This is the single biggest Ponzi scheme in the history of money, in the history of the world. You think Bernie Madoff or Enron and all that was big? Oh, you've seen nothing. That the U.S. government's literally doing this, and they're laughing. They're laughing about it, not the individual people, because they're just as stupid as me and you. The central banks are laughing about it. Think about it. How smart are the government officials? They're all being taught by the dummies. Just like how smart are people that are going to school for education? We're being taught by right-wing, left-wing nut jobs. So how smart are they really? That's why I tell you, maybe we should personally learn stuff. Like everybody says, oh, the doctor knows more than you because they're a doctor. Remember who's teaching the doctor. Remember these same doctors wanted us on a ventilator when we had lungs filled with fluid. What's the number one thing they're taught in med school when you have fluid on the lungs? Never put somebody on a ventilator. They know this. So they broke their oath for what? Easy money. The fellow pure, the root of all evil. Evil money is the point. Money. Money. So why don't I trust them? Money. The root of all evil. They all want that easy money. Easy money. It goes no different for the influencers. Easy money. People could say the same about me. Easy money, right? I don't take the easy money. Notice no sponsorships, no paid advertising, none of that. I could. Just in my email this morning, I got 4 different things that I can be handsomely paid. Temu wants to pay me $2,500 to do their products. Temu. Freaking Temu. You know, so, Riles, why would you regret your decision to invest in XRP? You should regret maybe the timing of your investment. Yes, I give you that. Maybe the price point was wrong, but I wouldn't be regretting it. I have 0 regrets. XRP's made me so much capital over the last 4.5 years, I can't even describe it. So, and I've been very clear when it comes to Dent, when it becomes the band and some of the other things. I've reunified the way I look, and I said if I'm going to take a gamble on those, I might as well take the gamble on when it gets to the levels, because right now I'm not gambling on any of those right now, and it's all gamble in crypto. But until crypto and Bitcoin particularly wants to go down to that 92, I've played this game before. Now we've got a gap filled from Friday where we're $2,000 over the top. This is a disaster lining up right now. It's a disaster. Yeah, no, I understand that, Riles, why you would regret it. Because you bought in more towards well, it's already went up almost 10x. Well, it was up 10x basically where you bought it, because it went to 28.4 cents approximately at the low. We bought the 28.5 cent and we sold it at 42 to rebuy when it hit the uptrend at 34 and never sold. Then we bought more at 38 and we were able to sell that at 350, 330, wherever you decided if you wanted to on the second bag. But there's been a lot of good movements we've made in this community, but we've stayed away when everybody else thinks it's time. Now everybody's thinking it's time to walk away. This next drop down is probably the drop that we need. It needs to be a real drop, though. Remember, when ETFs come out, the asset normally drops a minimum of 20 to 25%, sometimes up to 60%. ETFs are not, I don't care what anybody says, ETFs are not good for crypto. And what other part of the world or what other part of finance would you say, oh, we're going to create a second source of money to flow in and out of, but it's good for the initial investment. Are you freaking crazy? That's the dumbest thing I've ever heard. So now I don't have to put my money on the exchange or into the actual asset of XRP or the individual crypto. I can just buy an ETF on the stock market. That takes the capital directly out of the crypto market. That's what nobody tells you. It's a direct insult for anybody who trades crypto. Everybody's so stupid when it comes to it. Okay, well then go buy the ETF if you think it's a good thing. It's not a good thing because guess what? When they sell out of the ETF, they have to get real money, real currency. You can't just print USDT. Oh, that's the secret. Transfer from the crypto market where you can sell in fake USDTs printed out to pay everybody, or create a supply actual shock to the price because it's overinflated by having these institutions take it from crypto, which they now got the legal authority by the US government to do. And now they can put it in to the ETFs by just taking their Bitcoin and putting it there. And then they can sell it out as an actual trade on the actual NASDAQ or the stock market. That's a disaster. Because now you can't sell it out in USDT. You actually have to do it with sound money. Actually sound bullshit IOUs, but the US dollar. You can't fake that. Then that causes more printing. That causes more devaluation, but it also causes a shock when it comes to crypto money intake. That would be the same thing as me saying, okay, for example, Joe's in here. Joe, here's $100. It's great. It's $100. Now, you can either spend this $100 and take it to the grocery store, and you can go buy these products. Okay. Or the same products you can buy in the grocery store, we'll have it sent right to your house. What do you think Joe's going to do if apples to apples? Most likely, Joe's not going to travel to that store, and all things being equal, he's just going to have it sent to his house because he's got an easier avenue. It's no different than crypto. Why would I go on the risky exchange when I've got the guarantee of the stock market and the 250,000 FDIC backing? It doesn't make any sense. And it doesn't make any sense. Like most people who don't understand risk or don't want to deal with exchanges or don't want to deal with, hey, I have to, and here's the thing with the wallet. Hey guys, it's safe. You don't have to remember a password. You have to remember 20 different passphrase code or minimum of 10 code passphrase. Oh yeah, that's real fucking safe. That's amongst the stupidest thing I've ever heard for my safety. So for my safety, the odds are in 10 years, I won't remember this passcode. That's what they bank on. If you don't think it's real, it's probably, I actually want to see what AI says about this.
The exact percentage of wallet holders who forget their private keys is difficult to determine, as there's no central registry for crypto wallets.
Look, percentage, so including those from firms like Chain Analysis, estimate that around 15 to 20% of the total Bitcoin supply is permanently lost or inaccessible. But now if you talk about it in the exact crypto, that's what I mean. That's just Bitcoin.
The most widely cited statistic on this topic refers to the amount of Bitcoin that is considered lost. That's a great question, but the answer is complex because tracking lost funds across the entire
on Bitcoin, but do you see my point? There's probably 40% of people who use wallets never get their stuff out of it after probably 5 to 10 years. I would almost bet that. How many of you can even remember where you put your keys if you didn't touch them after 10 years? Like seriously, that's the Ponzi right there. I believe it. I believe they trick people. I believe they trick people. If I'm trading on an exchange and I can't trust it, it's never going to work. It can't work. Because it just can't work. The whole reason for a wallet was to move unilaterally without being tracked. It wasn't to store your crypto. It's not your crypto. It's not your keys. Well, it's not your mortgage. It's not your house. You're running the car. It's not your vehicle. You took out a loan. You don't really own it. I mean, it's the same thing in every sector. I mean, come on now. Public order books and slippage. Now we're going deeper. So it's it's a whole funny thing that we deal with. It's a lot deeper than it seems. I'm XRP Future Millionaire. We're gonna wind this down here because it's Saturday morning. Michigan starts in an hour. I want to check out the old FanDuel, see what's up here. Got like $300 on here from last week that I just keep until it gets to my time. And then we'll see what's going on. But I hope this resonated with some of you this live. What if Bitcoin is a parallel channel from December 17th, 2024 instead of a rising wedge, same 92? Oh yeah, absolutely. Absolutely. I don't hate that. I don't hate that. If we go down to 92, that's what I've been trying to figure out. If it goes down to 92, what exactly is the pattern? I'm not saying it's a rising wedge. I'm trying to figure out what it is if it does. If it actually, you're right about that. We'll see. Because this will go back to the old birthday time from last year. Where was this at? You're talking about the 17th, somewhere over here. I don't know. We'll see. Because you could technically take that same parallel move. I agree with that at 92 because it does match up back here. It does. That's interesting. I like that thought process. Let's see. So let's go from December. It's back here. No, it's right. Where was it at? 17th. Remember the 17th made that drop on my birthday last year? We basically hit the top on the 17th. I'm going to look at this when I leave. I just wanted to make sure that I kept that on there. So, but yeah, that's what we're looking at today. And we'll evolve this. Thank you, everybody. Make sure to hit that like button. I'm going to go out there because my son's, he's ready to get involved here. Now he got his feeding. But before I leave, for all my haters and all the lovers, I'm not a singer. I'm not. Somebody put this together. And if you're in the Telegram, make sure you look at what Oliver is putting together. Thank you, Oliver. If you put that on there the next time I come on, or I'll look at it while I'm playing the song if it's on there. But be blessed, everybody, and show integrity today. That's what I ask.
Sunny days, here again. Sunny days, here again. Sunny days, here again. Sunny days, here again. I wear glasses 'cause I'm so cool. I can predict the charts. Sunny days, here again. Sunny days, here again. Sunny days, here again.
Not bad, 111 and 111.